Hello there, everybody. Welcome to each of you, and it is time to get started. We really appreciate you being with us today. We have traders from all around the world, and wherever you are, I hope you're having a really good weekend and no virus problems. I know these are tough times for so many people, so many families, and we do hope you and yours are well and safe. This is Craig at Max Trading. Chris is here, Eusebio is here, and we are glad to include you in the Max community today. Other traders will be joining us later by video, and we welcome you. Thank you for watching the video. You know, fighting COVID has turned into a really long, drawn-out process. And one of the things I really like about trading is you can do it safely, even within your own home. And perhaps for you, this is an ideal time to learn a very profitable trend-following system. So we're grateful to have the opportunity to show it to you today. And on top of that, Eusebio is teaching 3 very important trading tips today. And even if you've heard them before, this will be a very good reminder, very good review for you, for all of us. And if this is your first time with us and you're hearing this for the first time, be sure you watch it again on the video and get a really good grasp of the tips that he will provide for us. We are very pleased with the ongoing performance of the Max Trading System. It's been live traded now for more than 12 years, and we know it is a game changer for all skill levels of traders. You might be a newbie, you might be a proven veteran in trading, and either way, everybody loves the confidence and the extra success that comes with this system. More than 2,000 traders have participated in a Max Trading course. If you think about it, folks, that is a lot of training, a lot of hours, and we have learned how to do it extremely well. You will get the help that you need. And in fact, we are beginning our 75th Max Standard course coming up in just a few days now, where you can learn this very profitable, very flexible system. Excellent for all markets and all time frames. One of those attending the webinar contacted me just a few days ago asking about whether it could be used on fast charts. Well, yes, it can. And if you like the adrenaline rush that comes with the fast charts, let's say maybe a 1 minute or 3 minute time frame, you will love Max Trading. Or if you perform better on a slower chart, 15 minutes, 30 minutes, 1 hour, Max is for you. And if you just don't have much time for trading, or you don't care for sitting in front of your charts for hours at a time, then you will really appreciate a 4-hour or 8-hour or perhaps a daily chart. And Max is also excellent for those long time frames. In fact, even a little bit more accurate on those time frames. And if your preferred market is YM, ES, or DAX, or Forex, or commodities, options, stocks, Max is for you. Very flexible, very powerful, very profitable. And you also get a great trading community along with it. Many of you will be taking a Max course with us in just a few days now, and along with that, you will get a lifetime Max membership. So we look forward to trading alongside you for many years yet to come, and we enjoy so much the reports that we get from Max members of how well they are doing in the markets. That community also provides a lot of ongoing support. Assistance for our members is unending. We have members who have been around 10 or 12 years and still have a question to ask sometimes or want us to take a look at one of their trades, and that assistance is always available. Not to mention the free trading workshops that come at least 2 or 3 times every month. And these allow you to continue improving your skills, and they are 100% free to our members. You know, new ideas are really important in meeting the challenges of trading because the market is always changing. And Eusebio has helped us to meet those challenges by developing 2 really important indicators, which we have added to every Max Trading course. And along with the course that you choose, you will receive those indicators at no additional expense. The ETF and the companion. The companion is our price directional indicator, and used along with the ETF, these make a huge difference in trading results. Everybody is extremely pleased with the power of these indicators and what they add to the results of the trading. All of these things, the professional training, the ongoing support, learning how to do correct price action analysis, global context training, and a supportive trading community, all of these wrap up together to give you a nice package for learning trading that can actually make a difference in your life. And no, we do not expect you to just take our word for it. We want you to see for yourself. And I will be sending each of you an invitation to attend a live trading webinar coming up on Friday of next week, so be sure and watch for that. We want you to see Max traded live on real-time charts. I think that's very important. And the great thing is that if you're working on real-time charts, you cannot exaggerate. You cannot hide anything. All of it is right there in the open for everyone to see. So please make your plans to attend that or to watch the video playback of that live chart session. Thank you again for attending today. Thanks also to those who are watching the video. And if you have questions, just ask anytime. During this webinar, you can use the question panel provided by GoToWebinar software, and we'll make sure that every question is answered before we finish today. And remember, there's a door prize drawing coming up during our Q&A time. So hang around for your chance to win a Max trading system. Eusebio is the developer of the very important new indicators that we use with Max and has contributed to Max for many years now, has traded the system full-time himself for many years, and I'll let him tell us a little more about his background and experience, but I want to just assure you, you cannot have a better coach. He is also the perfect choice to share with us the details about the Max trading system today. A phenomenal trader, a highly skilled teacher, and maybe more importantly to me sometimes, I know that he gets real satisfaction from helping his fellow traders. I like that. Eusebio, thank you so much. We're grateful for all that you do, and we really appreciate you taking a chunk out of your weekend to show us Max trading today. The microphone is yours.
Thank you very much, Craig, for this introduction. Hello, everyone. Welcome to this presentation of the Max trading system. I hope you are all fine. Presenting the Max, let me give you a small background, very small background who I am. So through my accent, you have recognized that I'm not, my English is not my mother tongue, so I'm indeed a Belgian trader living in France, and so a lot of inconvenience on my side, so I hope I will be understood enough. And I am a I have a former software engineer, and I have practiced this career for around 30 years, and the last 15 years in the banking industry, in important banks here in Europe, and this gave me the opportunity to be in contact with some bank traders from whom I have learned a lot. So I'm also interested in the financial market for trading, for investing for much more time, almost 40 years now. And I have considered almost all the financial market, the stock market, the options market, the futures market, and since 2000, the Forex market. In 2000, I was a part-time trader because I was still working for banks. And in 2009, I decided to become a full-time trader after having taken the course the first time with Dr. Jim Pruitt. I will talk a little bit about Jim in a moment. And so I became a full-time trader in 2009 now, especially in the Forex market. So this is for who I am. So now you can ask for what kind of person the Max trading system is perfect for. And so you may be an experienced trader looking for consistency. You may be a full-time trader wanting to get more profits or a multiple source of profits. You may be a beginning struggling to become profitable or needing a reliable trading system. You may want, as Craig has just mentioned, work from home. You want to plan for your retirement. You want to generate extra income. And so if you are among these type of persons, certainly the MAX is for you. And the MAX has been designed so many years ago by Dr. James Pruitt, known as Tiger by his student. And the MAX is in fact an acronym for three very important concepts. The M stands for momentum, the A of the MAX stands for acceleration, and the X for exit. The MAX is so a trend following system, essentially, with very strict risk management rules. We have a trade risk management and a money management approach, which is extremely solid, profound also. It can be applied to any time frame, to any market. Now, the M so stands for momentum, as I have said, because indeed when we want to take a trade, we want to be sure that there is enough momentum, but also enough volatility in the market. The A stands for acceleration, not seeing the price accelerating, but accelerating the profit we can extract from a trend by the scaling technique, in fact. And the X stands for exit, because at sometimes we will want to make some partial exit and then a final exit, as I will illustrate in some example I will present. So I will show some example. I will focus especially on the 5-minute time frame today, and I will give you also what kind of result you can expect from this kind of trade. But before that, let me explain just 3 tips as a gift for your presence today. 3 tips you can include in your own trading system, if you have one, in fact. And these tips, when applied correctly, will improve your result immediately. And so these 3 tips are the usage of divergences, the long bar rule, and the risk reduction technique. So let's consider first of all the divergence. You know that when we use an oscillator, a momentum oscillator especially, like the one we are using in this chart, which is the stochastic of the RSI, and let's consider we are in a downtrend. And so we know that when we compare the lows in the price, and when the price is making 2 successive lower lows, and at the same time the oscillator is making 2 corresponding higher lows, then we have what we call a divergence. Now, we may have many types of divergence, and in the course we teach 4 types of different divergence. But when we have a divergence, in fact, we have what we call an exit setup. I will come back to the exit setup in a moment. But once we have defined an exit setup corresponding to such a divergence, we have to define an exit level where to close the trade, possibly partially. And this is what we do in the MAX. So the divergence is an exit technique we use a lot in our approach. And so we can close a portion of the trade in order to catch some profit, and so to also reduce the risk we have on the remaining position. And so whenever you see such a divergence, you can consider to close a portion of your trade. In this example, we have 1 entry, 3 partial exit, 2 partial exit, and then the final exit catching, you see the profit I'm talking about, and representing a nice result, 1.02 to 1 for the result. So similarly, when we consider an uptrend, we will compare this time the successive highs of the price, and whenever we will see higher highs in the price and we will see corresponding lower highs in the RSI, so we will have, so in this case, a bearish divergence, which can be used also as an exit technique. There are several ways to implement the exit, and I will talk a little more about that in the examples I will present later. So, a second tip you can use is the long bar rule. We call it the long bar rule, or the long bar technique. A long bar, like this blue bar, so here is a bar having a length which is minimum twice, this means twice or more, the average length of the previous bars. Now you can take any number of bars, but we have strict rules in the max, and these rules are of course explained in the code, but this is the idea. And very often a long bar can be eyeball because its length is very larger than the previous bars. But when we have a long bar, and because 2 out of 3 times approximately the long bar is followed by a pullback, it may be a small pullback, it may be a large pullback, it may be also a trend reversal. But anyway, a long bar is always a nice opportunity to consider taking some profit in the case precisely the price makes such a pullback. Now the price will not necessarily make always a pullback. Some traders consider a long bar as a strong momentum indication. Unfortunately, in the Forex, you can scroll through many charts, you will see that the price will continue only 1 out of 3 times. So a good time to take a profit if the price pullback. And I say if the price pullback. This means that you need to define after the close of the long bar an exit level in such a way that if the price retraces to that level, you will take a partial profit, you will make a partial exit. This portion can correspond to a quarter, 1/3, or 1/2 of the length of the bar. It's up to you depending on your own risk aversion. With the max, for example, we like to consider only 1/3 of the length of the bar. And so if the price pulls back such a distance, we make a partial exit. And usually, depending where the long bar is present in the sequence of the trend, a long bar will always provide almost always a very nice profit. You see in this example that the profit taken with this long bar correspond approximately to the size of the stop loss. This means that when we take a partial profit, the risk remaining on the remaining position is very small, is well reduced in fact. And so banking a profit with the 2 tips I have just mentioned helps to reduce the risk on any position we are handling. But there is a 3rd tip we can use, which is illustrated in this example, to contribute to also greatly reduce the risk on the trade is adjusting the stop loss along the trade, along the trend. As long as you stay in the trade and the trend is unfolding, you can progressively adjust your stop loss following some specific rules. And you have to pay attention how to adjust the stop loss in order to avoid some pullbacks which may be deeper due to some volatility. Tightening or adjusting your stop too tight may have the consequence to be stopped out too early. And so you have to pay attention to the volatility. One way to do that, for example, is to take into account the average true range, which is one way to measure the volatility of the price. And so you can adjust your distance at some multiplier of the average true range, so in such a way to avoid not necessarily all the deeper pullback, but many of them. So, and adjusting the stop loss on the remaining position will also contribute greatly to reduce your risk. And very often, after you have made a partial exit and you have adjusted your stop loss, your trade very often will become risk-free. And this alone is well worthwhile to be considered. So, and when you are risk-free, you can develop that courage to stay longer in the trend as long the trend unfolds, despite all the pullback the trend can exhibit. So these 3 tips will really help you in your trading system, and they are used in the MAC trading system, of course. Now, let me show you some example of what you can obtain with the MAX. And I will focus, so as I have said, only on the 5-minute time frame today, but I will consider 3 types of market. First of all, the stock market. And I consider here an index, the Dow Jones. You can take any kind of index, the Dow Jones, the S&P 500, the Nasdaq, the European index like the DAX or the FTSE 100, and so on. You can apply the MAX, of course, with the corresponding futures contract, the YM for the Dow Jones, for example. And here we have an uptrend. It was a few days ago. We have an uptrend on the Dow Jones. By the way, our max advantage bias, which is the direction of the trade to favor given by our own analysis of the global context, was telling us that we had to trade the Dow Jones long. the stock market long, in fact. And with the max primer, we get that day 3 trades. We have a first entry setup here. LEN means long entry, first entry, and then along this up movement, 2 exit setup have triggered, giving each one an exit, a partial exit, and then a final exit. We consider that each trade is made of 2 units, the size of which is defined by the position sizing concept. And so when we make a partial exit, we close 1 unit, so half of the trade. And so the first trade has made a profit, as you can see here, of 1.38 to 1. What does this mean? This means that if you risk 1% of your trading account on this trade, this first trade gives you a profit of 1.38%. Another way to explain the profit is if you risk $100 on this trade gives you a profit of $138. So this is what 1.38 to 1 represent or means. Later on, a second entry setup has appeared, giving a second trade with the same mechanism, a partial exit and then a final exit. So here, giving a second trade with a 3/4 to 1 for the reward to risk ratio. And then a few bars later, a third trade with an entry here, a partial exit here giving a small loss, and then a final exit here, so giving another almost 0.4 to 1 for the result. And so on that day, so 3 trades for a total of 2.51 to 1 result. And you can see that these trades were long trades given by our companion indicator, which is this green or red line, which is called the slow bias indicator. When this slow bias is green, we will take only long trade. When the slow bias is red, we will take short trade, provided we trade also in the direction of the global context. The global context being made with all the information provided by the central banks, the geopoliticals, the news releases, and so every external factor which may happen, or which may impact the market. So now the same trend used with the max standard. And the max standard, the big difference between the max primer and the max standard is the max standard use a scaling approach. Scaling in means adding additional trades to the position, to the initial position, in order to build a larger position along the trend. And in this case, we have only 1 trade with multiple entries, multiple exits also, which are called scaling out or minor or momentum exit. And you can see, I will not go into the very finest detail, but we had an initial entry, and then 5 additional entries, so for 6 entries, and a lot of partial exits. So we had 11 partial exits before the final exit, which happened in this case at the trend reversal. So a nice long trade, having started at the beginning of the trend until the trend reversal. In fact, the trend reversal is represented by a short entry setup. And you can see the type of result, 656 points with a stop loss of 37 points, representing a total profit of 8.86 to 1. This means that for a $100 risk on this trade, the profit would have been $886. Or if you speak in terms of percentage, a 1% risk will produce an 8.86% profit on your account. This means that in 9 days, with 9 such trades, you can double your account. So, and you can compare that result with the result provided by the max primer. So almost 3 times the result of the max primer. Now, what is an entry setup? What is an exit setup? An entry setup always represents an opportunity to open a trade. An entry setup is a certain number of conditions which must be fulfilled. We have mandatory conditions and we have optional conditions, but we need to have enough conditions to be fulfilled in order to have a valid trade. And similarly, when we have an exit setup, this means that a certain number of conditions must appear to consider that a risk is appearing for the trade. What is a risk? In fact, there are a lot of risks, but we can make it very simple. Whenever the price begins to make a pullback, that pullback, because we never know how deep the pullback will represent a risk. And so in order to mitigate that risk, we have to define, in order to limit that risk, where to make a partial exit. This is how we consider all our exit techniques. And we have a lot of exit techniques based on indicators, exit technique based on price action, exit technique based on time consideration along the day, combination of price action and indicator. And so lots of different categories of exit techniques. But this was an example in the stock market with an index. But of course, we can trade another market, for example, the commodities market. And I have taken here the example of gold, again, a few days ago. We were also in an uptrend. You can see here the change of trend because the slope has changed from red to green, and taking a long trade was also in agreement with our global context bias, which tell us to privilege the long trade. And so with the Max Primer, we had two trades. The first trade with one entry, one partial exit, one final exit. The second trade with one entry, one partial exit, and one final exit, and so two trades, and you can see the total result, two winning trades, by the way, with a total of 4.1 to 1 result. Now, the same trend with the Max Standard using the scaling technique has given only one trade, but with multiple entries. In total, 4 entries, 3 partial exits, before the final exit, closing all the remaining open unit. We had 5 open unit remaining at that moment. Indeed, you can count. For each entry, we have 2 units. So having 4 entry, we have 8 units. And we had 1, 2, 3 partial exits, each one closing 1 unit. So we have opened 8 units, closed 3. We were left with 3 open units. And with all the technique I have mentioned previously, so we have been able to produce a nice result of 12.8 to 1. So 3 times, again, more than 3 times the result of the Max Primer, thanks to the scaling and scale out technique. And we can trade any type of commodities, gold, silver, oil, of course. So all the commodities the futures market allows you to trade. But we can trade, of course, also the Forex. And I have taken here a very common pair, the pound US dollar, which is one of the most traded pair with the euro US dollar. And we were again a few days ago in an uptrend. The bias that day, due to a news release, which was a very important news release in USA, was to go short after the London Open. I have not mentioned the short trade here, but it was possible to take this short trade. And then after the news release, which has been somewhat disappointing for the US dollar, so to go long on the pound US dollar after the news release. And I have illustrated the long trade so here. With the Max Primer, 3 trades were possible, and you can see so here the result for each trade. Note that in the sequence of these 3 trades, there was one losing trade, and the loss was a tiny loss, minus 0.13 to 1. And this is a great feature of the Max. Whenever we have a losing trade, the loss will be always a small loss. And I will talk a little more about that in a moment. But whenever we have a winning trade, usually the profit will be way larger than the losses. And so you can see the result, a nice 2.15 to 1 result for these 3 trades. Now with the Max Standard, with the scaling technique, we had to trade in the same direction, of course. Now we had only 1 trade with 6 entries, so an initial entry and 5 additional entries, 6 partial exit and 1 final exit, giving a nice 4.81 to 1 for the reward to risk ratio, so 2 times the result. If I come back to the Max Primer, so the Max Primer was giving a result of 2.15, so you can see more than 2 times the result of the Max Primer. So the scaling technique, when applied correctly, really improves, in fact, greatly the result you can extract from any trading system. So strong trend trading system, which can be combined with the analysis of the global context, strong money management and trade risk management, providing nice results. So each MAX course provides so these method and concept that work, because these concepts, we explain why these concepts are working, and they are working because they are based on what the big boys, and by big boys I mean the big banks, are doing in the market. And so our approach is based on what they are doing. We don't know exactly what they are doing, but we have a good idea of what their objectives are. And so all our training and support, Chris will talk a little more about the support in a moment, will help to reinforce your trading skill and the money management. And I should add also the trade risk management when you apply the MAX. And so the confidence you need to have, you need to develop to trade, not only confidence in the market, but also confidence in the system and confidence in yourself. And for that, we have a lot of activities, mentoring, homework, sometimes workshop, practice session every week. So Chris will explain a little more in details. And so today we will provide you the possibility to subscribe to our two most important courses, the MAX Standard course and the MAX Primer course. I have just illustrated with these three examples. But these courses are focused mainly, not only, but mainly on technical analysis and money management. But we provide also a lot of information, and many of them free informations to our members and non-members for the global context. For example, if you go on our news watch list, so the address of the news watch list is www.maxtradingSystem.com/newswatch. You will get a lot of free information. First of all, there will be a first section given all the geopolitical elements you will have to take into account. Follow them in order to see what kind of impact they may have in the market, any type of the market. Now, the same event may not have the same impact in the Forex or in the stock market, for example. For example, we can see that if there is a problem concerning oil, crude oil, the price of crude oil may go up, for example, and this can be beneficial for some currencies in the Forex, but not necessarily for all. But it is not necessarily favorable for some stocks in the stock market, for example. Then we prepare, as a second section of our Newswatch page, a simplified economic calendar, when we consider only the news which are really important in the Forex market, because we trade mainly the Forex market. And so we consider all the news which may have really an impact. And we give them under a form which is explained in detail on our web page, so I will not go into the details so here, but we consider only these news, and we can ignore all the other news. Then we indicate what are the best moving pairs. It is not necessary when we want to trade trends to trade any pair we have. In order to increase the odds to be profitable, we have to consider essentially, and I will say only, the nice trending pair. And so we provide every week an updated list of these nicest trending pairs. And this list does not move a lot week after week. And then for each day of the week, when we compare that top pair list with the economic calendar I have shown just a moment ago, we can consider what pair to favor in priority for each day of the week. For example, what are the pairs we can consider Monday, Tuesday, and so on, in order to have to follow only a very small set of pairs and not all the pairs. And believe me, this will really make your trading process easier and much more profitable on the longer term. Now, we also provide, but this is not a free information, so the global context bias, which means that for each pair we consider, for each market we consider, and we have, for X pair, we have the stock market. You can recognize some indices, the S&P 500, the Dow Jones, the Nasdaq, the German DAX, the UK FTSE 100, commodities market with gold and crude oil, and some bonds market with the US 10-year Treasury bond, the Euro bond, plus also the VIX on the S&P 500 in the stock market. So we provide every day, from the Monday to the Thursday, I take off the Friday usually, I provide the direction we have to favor in our trade. For example, green up arrows means that we have to favor long trades. Red down arrows mean that we have to favor short trades. And the bias can change several times along the day depending on the events, geopolitical or news release. And this kind of information, which is updated in real time, so is available for Max members or non-Max members for a free monthly subscription. And so these bios are available for short-term trading, so for traders who trade the small time frame, 1 minute, 5 minutes, 15, up to the 1 hour time frame. But we provide the same kind of information for traders who trade the higher time frame, H4, daily, weekly, monthly. Now, just to conclude my presentation here before giving the mic to Chris, so let me give you some kind of result you can obtain with the MAX. And I will focus again only on the 5-minute time frame. Now, many are interested into the winning rate. And if we do not take into account the MAX advantage bias, so the direction given by the global context, the MAX provide a winning rate between 70 and 75%, so over time. But if we include the max advantage bias, so the global context given, so the direction given by the global context, the success rate so jumps to somewhere between 90 and 95%, and some days even 100%. When we consider the max primer, we will have between 3 to 5 trades per day per pair, between 3 and 5 trades per day and per pair. When we have a winning trade, the result will spend generally between 0.5 to 1 to 1 to 1. So between 0.5 to 1 and 1 to 1, sometimes more, sometimes a little less, but most of the time between these two limits. And when we have a losing trade, the loss will spend between minus 0.2 to 1 and minus 0.6 to 1. With the max standard, we will have between 1 and 3 trades per day and per pair. We have less trade usually because we try to exploit a trend as much with the scaling technique. The winning trade will have a larger profit, on average between 2 to 1 and 5 to 1, sometimes way more. We have seen trade with 10 to 1, 15 to 1, 20 to 1, sometimes a little less. And because of the scaling process, the losing trade will have sometimes a larger loss. But usually the loss is still very contained between minus 0.2 to 1 and minus 1 to 1. And so the losing rate is very small when you see what the winning rate is. And if you calculate the expected, I will let you that exercise, that as an exercise. So when you calculate the expectancy of the max trading system, you will see that the expectancy is way, way positive. And so this shows that the max is a very, very powerful and profitable trading system. And now, of course, my friend Chris has very important additional information to provide you with, and so now I give the mic to my friend Chris. Chris?
Okay, thank you, Eusebio. Hi, everybody. Can you hear me okay? I'll just check before I do the rest of the presentation.
Perfect.
Thanks, Eusebio. So Eusebio will be my keynote assistant running the mouse in the background in Belgium while I broadcast here from New Zealand. I'm one of the partners in this venture. This is our 75th set of courses, and like Craig said, we've trained over 2,000 traders since 2008. I was trying to work out a way of saying we've been in this business for about 3 decades now, in the 2000s, the 2010s, now in the 2020s. So getting on for it. Next chart, please, Eusebio. What I'm going to go through very quickly is just a recap of what Eusebio has been through. Is he's shown you the long bars, the divergence, and the risk reduction tips. If you haven't seen them, and you're watching this on the video, or you will get the video, then just scroll back through it and go through that. They're very important. They're some of the basis for helping you protect your accounts. He showed some examples of how the profits can be made from using the max, using different time frames. So you're not restricted to any particular time frame or even chart itself. With the max trading system, we have all sorts of turbochargers to help you get there even faster and optimize your profit. But we do it really safely. So one of the super prime things that we go for in the max is we're really careful about the money that we give out. We're really conservative. We don't want you to take any risks that are too much for you. Okay, and Robert said not to blow it. Okay, again, yeah, a lot of people have lost their accounts a few times before they actually sort of become profitable. So next slide, please, Eusebio. So we all know what you want. Just think about it, that you're there to take on risk, and then you're there to manage the risk. Making the profit is an end result of being really careful about managing risk. So the question is how you're going to get there. And you can either keep on doing the same things, but I presume that you're here because what you're doing, you want to either become better at or add extra tools to it, or it's not working for you, it's a weak system. So what we've got here is a professional system that has supervision for you, interaction, really consistent results, and lots of personal feedback. The reason that we need to do that is because when you're trading, the risk side of things is we've got poor price action, and these days the forex market isn't moving that well. The indices are moving quite well. Some stocks are sort of taking off. Everybody's wondering when the crash is going to come, but we get all sorts of movements in our charts. Some indicators are not as good as others, and some of the details that you get from simple basic charts from simple systems aren't all that helpful. You really need some sort of roadmap so that you know where you're going. And one of these things is what we give away for free. So price levels also are given away free, a sample of them. And the Newswatch can help you greatly on this side of things. If I'd known about the Newswatch, I wouldn't have lost so much when I first started trading back in the 80s, 90s, because I would have been aware of when there was major volatility coming up because of a news event coming out. But you still need to know when these major events are going to occur so that you can either avoid them, and we teach you how, and it's written on the Newswatch page. We just don't trade prior to them, or we wait for them to occur so that we can take advantage of any movement from them. Dynamic support and resistance levels. They're really, really quite cool. They're like driving with headlights on. They're only available in the standard, but when you get onto a chart, you can see instantly if the chart is in an oversold or overbought position and is likely to turn around. You can see immediately using these resistance levels where price is likely to turn around and where price is likely to go to if it does turn around in either direction. And they adjust themselves as they're going, and they're forecast ahead. They don't repaint or anything like that. So they're quite nice on that way of things. If there was only a couple of indicators that you could trade with, this is definitely one of the most important ones to actually have. And what I've been trying to sort of hammer on about in the Max is that we do our best to minimize your risk. So we've got a pile of money, and trade risk management goes into the courses. In the scale-in side of things on the Max standard, not in the primer, we're offering 2 courses here. The more scale-ins that you get, and this is kind of counterintuitive, you end up with actually less risk. So at times, and sometimes with the primer, it becomes that when you get into a good trade, you can end up very quickly with this standard, but at some point in the primer sometimes, you can end up with a guaranteed profit so that all the stress is completely taken away You don't need to worry about price coming back and slamming up against your stops and losing all the money that you made. You're in a position where you're guaranteed a profit even if the stops are hit. Okay, so the max training benefits, not the trading, but the training side, is we give precise and detailed setups. So on a 5-minute time frame, you can at times be getting in within half a pip of finding the setup bar. So we have a pile of criteria which says, okay, this is the setup bar, and then the next bar, within a half a pip or maybe 2 or 3 pips, you'll be getting into the trade. And similarly for getting out, the same thing applies. We always use a hard stop whenever we trade. We're not these he-men that trade without stops. They're essential. If your PC blows up or you lose your internet connection or something, you need this in order to protect your account. And while we're in a trade, we use a pile of trailing stops. They're either mental ones, or if you're doing long-term trading, limit orders to make sure that if price does come against you, you don't actually lose any of your profit as well as your account. One of the important things with the Max is that we use homework. We assign homework at the end of each session. The reason for this is to make sure that you've understood properly what we've taught. There's a lot of times when somebody has told me something and I think, yep, I understand that, but I'm biased, or I didn't understand it completely, or I've completely messed up and looking at the chart in completely the wrong way. All of that has happened to me. And it's not until somebody else comes in from the outside and says, no, Chris, it's not horizontal, it's vertical that you should be looking at. Or, no, you've got that wrong, it should be such and such. So what we do is we ask you to do homework assignments. They're pretty simple. You mark the chart up with the information that's come through for that day and send the chart in. Generally, it'll be probably me that marks the chart up. So I go through it bar by bar and explain where you've done things correctly, where they're incorrect, and also give hints and tips as you're going through the chart, because not everything is covered in the course itself. The homework also has a lot of information coming through, and it pays to look at other people's homeworks at the same time. So the homework also, really important, it gets your hands dirty. So rather than just, oh yeah, I've got this PDF and I've got the video and I've watched it once and that's enough, this actually makes you sit down and get your hands dirty with the charts. So things are completely different when you just have it in your head as opposed to when you're actually working with it on a chart itself. So it speeds up your capabilities, speeds your learning up, makes the learning deeper, and if anything is wrong, then it sorts that out straight away so that you don't carry on with it and develop some sort of habit, and we get you on the straight path right away. Okay, and each week we run what we call a scrolling party. It's a practice session, and for the Maxes who haven't seen it yet, there's one on tomorrow. Normally they run at this time, but we're running, because this promotion is on now, we're running it tomorrow at the same time. So you should have received the Max members should have received an email about this. If you haven't, let me know. Email us and I'll send it out. Sometimes our mail service sort of goes a bit balmy and drops people off. And we also supply extensive after-course support. So we're kind of sticky that way. I'm still answering questions from people that had done the course in 2011 and still wanted some help. There's no problems with that. We just answer the questions. If you send a chart in to us and it's really interesting, then we'll bring it up in the scrolling party and go through it bar by bar and analyze it in depth so that you completely understand what's going on. Okay, so what you're going to get from the Max courses is complete training. You get in with both the standard course and the primer, you get a full system with all the indicators and templates and the examples and the videos. There's nothing else that's required. We do have a a trade manager if you wanted to try it out, but you don't need it. So everything is complete in here. We give you the precise and the detailed setups. Like I said, one-on-one, bar-by-bar explanations of what's actually happening. And you have a lifetime access to all the course materials and support. Weekend practice sessions, occasional live sessions like coming up this week with Eusebio, help whenever you ask, like I said, years later, and you'll be invited to the forum, although I think Skype and Twitter are kind of killing that off a bit. But in the forum, all the indicators are sitting there. Example charts from way back would be extra confusing. People's use of the forums has kind of died off since the 2010s. So you'll be invited to it. You're most welcome to come to it. There are some indicators there for other platforms, but if you did want to use the Max indicators on another platform, we have some for Ninja, which we're happy to give you, or we can just simply supply you with the source code for the indicators, and you can have them translated or ported over to your particular platform. So what you're going to end up with is a win-loss result of something like 65 to over 85%. On the higher time frames, we can get up to 90 to 95% average winning entries. So, and the average drawdowns, if you have, say, 100 orders and you have some losses on those, the average losses, not the loss of the whole thing, but the average, whenever there's a loss, if you add them all up and get the average of them, it's going to be around about half of what you risked. So if you're risking 1% on a trade, what your average risk is going to be, end up going to be, is 0.5%. Or if we look at it another way, if you risk $100 on a trade, then what you're going to lose whenever you lose, on average, it's going to be about $50. So it's quite minimal. That's the way Jim and Eusebio tailored the risk management side of things. The standard course is going to be 30% to like 3 to 5 times more profitable than just a simple buy and sell course. And the primer is a simple buy and sell course. It's profitable, but it doesn't have the profit boosting power that the standard does. You'll get as much support as you ask, and you're going to end up with some really powerful and safe trading methods that you can bolt on to any existing methods that you're using, especially with the standard. We've had people come in that have been really good traders, and within a week or two of learning the standard and how to do the scalings, they've started using them straight away to boost their profits on their own particular trading style. Okay, and what we're trying to get for you from this is so that the benefit to you is that you end up achieving your goals, so that you don't crash your car while you're trying to get to Rich City, and that you end up being able to get as much of the money, the profit, as you can to sort out your independence or your security or whatever bills you've got or your retirement. The two courses that we've got on offer today, just side by side, is the Max Standard and the Max Primer. The Standard is our flagship, and we've got other more advanced courses following the Max Standard, but you need to have done the Standard first before you get onto the Max SAM, which produces 50% more profit than the Standard, and the Max Advanced, which gives you a lot more in-depth information, and also is another 50% on top of the Standard and the SAM courses. So we've got ways of boosting your profit over and above the Standard again. So the Standard goes for 7 sessions, Primer is for 2. Standard has got a lot of entry scenarios. I think it's something around about 7 to 11. I know those are prime numbers, but the Primer has got 2 or 3 different entries. It's quite simple. The Primer moves a lot slower than the Standard as well, because the Standard can take advantage of a lot more movement. And then the the Standard can boost your profits again. Right? We keep saying 30% over 300%. The Primer is profitable, but you just get into a trade and then you get out of the trade at the end. the standard, you get into the trade, and then in the right conditions, you keep adding to the trade so that the profit comes out. And we do that really safely so that your account is not put at risk, so that your profits are there at the end. And unless you are really over-enthusiastic or start revenge trading, then the max standard is very profitable. And like I said, counterintuitively, the more that you actually scale in, the more that you try and make profit from it, the safer, the less risk that comes on the trade. Okay, next slide please, Eusebio. Hey Krista, nice to see you. And so the standard course starts on Thursday the 9th, about a week's time. It meets for 7 weeks at 3 p.m. on Thursdays, and the regular price is $299, but we're running this webinar special of $2399. Next slide, please, Eusebio. That the primer course runs at the same time. The first 2 sessions of the standard and the primer course. They run concurrently. Again, it's 3 p.m. on the 9th. It starts, but it only runs for 2 sessions. So at the end of the 2 sessions, the primers can carry on trading. The standards can trade at a lesser level, but from that point onwards, the standard course starts showing you a lot of different entry techniques, a lot of different exit techniques, and a whole pile of knowledge on being how to boost your profits while you're in there. But the primer course, normal price is just over $300. The webinar special is $159. Next slide, please, Eusebio. So here are the 2 side by side, just so that you can see, and we'll leave this up here for a minute with our contact detail at the bottom. Okay, thank you very much for participation. What we're going to do now is I'll leave the webinar discount information up there, but we've got our contact information at the bottom. If you have any questions, please feel free to contact us on those details. Happy to help on that side of things. And if you have any questions, please put them in the room. And we've got some to go through. But Wally has asked, please once again show the Forex pair priority 1, 2, and 3 charts. Forex pairs on the charts, are they the only pairs you recommend to trade? No, Wally. We have a whole pile of recommendations. If you jump onto the Newswatch page, you'll see what ones we recommend for last week. And if you want to subscribe, then we'll send them out for each week. But Eusebio is just trying to find the things. So, okay, he's brought up the Newswatch page. So while you're doing that, I'll put that in here as well. So our Newswatch page is this one. Take over explaining, Eusebio, while I try and type. I can't do 2 things at once.
Yeah, in fact, as I have explained previously on our news watch list, so we have a first segment. It will be updated this weekend, so tomorrow, in fact, we have the geopolitical elements we have to follow, because if something evolves in one of these elements or several of them, they will have an impact in the market. Then we have a simplified calendar. We represent only the news which may have an impact in case of a big surprise. And these news are the news which are labeled by everything except monitor, so all time frames under H4 and high impact sometimes, for example, with the central bank intervention. Then we have the top pair list, the best moving pairs, and when we match these pairs with the news release, so we get the recommendation for each day of the week. So, and this page is updated every Saturday or Sunday and freely available to everyone, max member or non-max member. If you want to be notified when the page is updated, you can subscribe to the page by setting your first name and your email address, and you will be informed when the page is updated. So,
yeah. I send it out as soon as I update them. So, and maybe you say we can do that straight away after this, perhaps.
So, sorry, Chris, what?
Maybe we can do the Newswatch as soon as this promotion is finished. Yes?
That's a possibility, Chris, yes.
Okay, cool. And that way I'll bang them out in the next few hours. It takes a bit to get through all this stuff. And yeah, the email just goes out once a week. If you want, you can be invited to, or also get the price levels, the free price levels as well. Just email in and let us know that you want to be in on them. And I automatically subscribe any new Max member, anybody taking the course, to the price levels and to the Newswatch. And there's one other thing that we do as well. I can't remember. It's too early on a Sunday morning here. Okay, so some of the questions that we've got is, Gary wrote in and asked, do we offer a home study course for the system, or is it all webinar based? Well, we've got people all around the world, Gary, so we run the courses live at 3 p.m. on the Thursdays, but we video them and we send them out. So we have people in the States that are able to do that, and late at night in the UK. But people in Australia and Japan, etc., it's kind of early, like very early in the morning for them. So they just run things by video. There's a whole pile of information. Eusebio is really, I can't say this without making it sound like I'm being rude to him, but the information he gives out is quite dense. It's very compact. There's a lot of it, and it requires more than one go through the video in order to extract it all. You can't just pull it all out just with one hit on the one watch. It is that compact. Okay, so we send the videos out as well, and people do the course by video. Okay. Can I use any charting package? The answer is yes, but we train with MetaTrader. That's so that everybody sees the same thing. And that when we get the homework back, that's much easier to mark up. We also have a convention of marking the charts up so that even years later you can come back and still read your chart. So it helps with the journaling side of things and keeps everybody being able to read one another's charts very easily. Does the Max work on commodities, futures, markets? The answer is yes, absolutely. I think Eusebio gave some examples on that. And how small a time frame does it work on? We work on all the time frames, even down to ticks if you really wanted to go that far, like using a tick chart or something like that. Other questions have come through. Chris? Oh, sorry. Yeah, John said that everyone uses the same broker. This is only for practice, only the same broker. We don't recommend any brokers. So if you ask us, we won't recommend one. There have been some that we've seen that we thought were really good. They turned out to be, ended up with their fingers being caught in the till. So we don't recommend brokers. But we use one particular broker just to keep everybody on the same page. And it's not because they're good or anything like that. It's just because they have got good weekend bars and it keeps everybody together. Yep.
Yeah, and one of the advantages we have with the broker we have chosen for practice reason only is also with this broker, when we open a demo account, it never expires. With many other brokers, demo account expires after 30 days, and so you have to continuously open a new demo account if you want to continue to practice. So this is a great advantage. It's easier to use such kind of broker, but it is just for practice usage only.
Yep. Okay, other questions? Okay, kind of a technical one. Platforms tend to jam on news with some brokers. How can I avoid this? I'll let you answer that one, Eusebio. I haven't seen it for ages.
In fact, some brokers indeed slow down the trading platform during a news release. The reason is very simple to understand. You need to understand, first of all, the business model of the broker. The broker, when it is an ethical broker, so an honest broker, will rarely be your counterparty. It will not trade against you. This means that it will have to aggregate a certain number of customers' orders before routing this package of orders to one of his liquidity providers. Because who are the liquidity provider? They are the banks in general, the big banks. And the big banks have a requirement about a minimum size route to them. And so this imposes to the broker to he got the right size of the order to route to the, and during a news release, especially if there is a surprise in the news release, there are big spikes. And in this case, the risk will be on the side of the broker, and the broker do not want to do that. This is why very often the brokers slow down the speed of the broker and sometimes prevent the trader to trade. And so this is not a negative element. It is an element of protection, not only for the traders, because you will get very often bad price execution, but also for his business model. If he is not your counterparty, do not expect him to be able to route your order immediately to the liquidity provider. There are constraints, and you have to understand that. And this is the first point. The second point is when there is a news release with a big surprise, the spread may widen. This is not necessarily a decision of the broker. It can be partially a decision of the broker, again, to protect his own business, but it's also the definition of the spread, so the ask and the bid price, comes from the liquidity providers. And so the banks define these ask and bid price. And so we are submitted to them. And so this is why sometimes to avoid too large spread, also the broker slows down the platform, the trading platform. And so it's you must consider that as a protection for yourself instead of constraints. I like not to be able to trade during, for example, the non-farm payroll itself. I prefer to wait for the news to have been released and to see the volatility slowing down before taking or before considering to take a trade.
Okay, let me see. Anthony has asked, is the broker providing a simulator option? The MetaTrader platform has got a strategy tester in it, which can simulate some trades. But we use a third-party simulator, which is free for simulating trades. It's very good, and our templates just drop on top. There's no need to change anything. There's also, forgotten what it's called, there are a few simulators out there that are available. Some need to have your charts coded for them. The one that we use doesn't require any of that, and it's free. Some are paid for, but we do use a simulator to help you get through this stuff. Wally is asking what broker has non-expired demo accounts that we as traders can use. One of the ones that I've seen, hang on, I think FXDD is, I don't know if Americans can get access to them, probably, but FXDD, I think, hasn't expired, and Active Trades expires, and TradeView is another one. So I hope that helps, Wally. TradeView, two separate words, one word, and FXDD, I don't believe they expire. Okay, and cool. What else? Okay, another question that's come through is, where is it? I would like to ask you how to avoid going greedy. I started 3 times on the Forex, yet I end up losing it because of going out of limit when deciding the lot sizes. Eusebio, I think I'll leave that up to you.
Whenever you consider to trade, you remember the first question Chris has asked you during his presentation. What is the first or the essential activity of a trader is to assess a risk and to take that risk, to trade that risk. This means that there are risks you can afford and risks you cannot afford. When you make a losing trade and you feel uncomfortable with that losing trade, most likely this will mean that your risk was too large. So you have to ask you two questions. Was my trade size too large because I want to make fast profits? And so a temptation is to take big sizes in the trade. And the second question is, was the risk for that specific trade worthwhile to be taken? Which means that you need to apply a good methodology to detect if the risk is interesting or not. If the risk is not interesting, if your entry setup is not interesting enough, skip the trade. Now, if the risk is worthwhile, you have to size the trade risk in such a way you feel comfortable enough when you trade, because you will have losing trades. When I trade with the max global, the global context, my winning rate is between 90 and 95%. This means that I have between 5 and 10% losing trades. I cannot avoid the losing trades. But when I make a loss, I need to feel very comfortable with that loss. This means that I need to take a risk small enough per trade. Now, what is a recommended risk per trade? Many traders, many professional or so-set professional traders explain that a 2% risk, 2% of your trading account should be a maximum. And I pretty much agree with that maximum amount, but personally I even consider that 2% is too much. So you have to make a test. When you make a live trade, if you feel very bad with a losing trade, this means probably that your risk is too much. And so lower your risk, 1%, for example, 0.5%, until you feel comfortable enough, but you still need to feel a little bit hurt when you have a losing trade, just to get motivated, to stay motivated to trade, in fact. And so, in fact, you can be greedy, but you need to be greedy the correct way. Being greedy does not mean that you have to make a big profit with just one trade, having one entry, one exit. This is gambling. But you can reach big profit if you trade a trend and you make progressive scalings along the trade, along the trend, while you are controlling your risk. Then in this case, you can become very greedy. And you will discover in the max standard, Chris has already explained that, which seems counterintuitive, but when you will understand our trading, the trade risk management approach, when you will learn how to make the scaling properly and how to adjust your stop loss properly, then you will have a complete control of your risk, and at some point when you will become risk-free, your profit will continue to increase without risk, without no risk at all, while you are making your scaling. And in this case, you can be even super greedy.
Yeah, that's kind of why I brought that question up. Eusebio is super greedy. At points where other people would get out of the trade, Eusebio says, no, stay in. Most times it will carry on. And so he doesn't get out, and he goes for the bigger profit. But you can only do that when you have a really good idea on how the market is moving and what the global context, the bias is like in the background. And that's some of the information that Eusebio is providing with his bias advantage system and with the improvements that have happened to the max so far, and incidentally to maxes that will be happening shortly in the future. Says Chris, preempting everything. Okay, sorry, Eusebio, I'm stealing your thunder a wee bit there. Eusebio's been working on some new stuff. Okay, only a couple of questions left. Let me see if I can merge some of these things. Okay, in short-term trading, is it possible to have a positive risk-reward ratio without being stopped out much of the time because of volatility, big tails, before it moves to where your take profit would have been? My stop loss seems to be often too near, but if I place it further, the risk-reward would would only be even or turn into a negative risk-reward situation. Can you answer that, Eusebio, or is that a bit
sure.
Okay.
In fact, yes, you can have a profitable trading system with a positive expectation in any time frame. I know traders who are scalping the market with the same types of concept. So in a time frame corresponding to a 10-second time frame, for example. But what does this mean? It means that in your trading approach, you have to be exactly aware of the kind of movement you want to catch. You need to be aware of the kind of volatility you will face in order to catch this trade. And then you have to define accordingly your stop loss and then eventually your target profit. In the Max, we don't like to fix a target profit because we want to catch trends, and we have defined the concept of true trend, which corresponds to large movement, which happens between 2 and 4 times per week for each pair, for almost each pair. And so there are enough opportunities to make a big profit so with these two trends. So it is essential to have a profitable trading system, to know what kind of movement you want to catch, how to detect them, and how to handle the corresponding trades along these movements. So if you don't have a positive expectancy, this means that one of these points is missing in your trading approach.
But thank you very much for your time. And if you do have any questions, please ask. We'll be here for you. Thank you. And thanks, Eusebio.
Thank you very much. My pleasure, Chris. Stay safe, keep safe, you and yours, and see you in one of our Max courses. Have a great rest of the weekend, and in the meantime, take care. Bye, everyone.
Bye.